Today, I want to talk about one of the most important trading concepts out there. The concept that single-handedly made me a profitable trader after 3 years of struggling, blowing personal accounts, blowing prop firm challenges, and not seeing a way out. But once I understood this one concept, my trading went from unprofitable to having days like this and this, making me very close in achieving 7 figures in profits in just 3 years. And today, I want to simplify this to you, as I know that if you pay attention and you apply exactly what we are going to talk about in this video from start to finish, you will see significant progress in your trading journey. So with that, let's go onto the computer and see how we are going to master market direction. So let's talk about daily bias and how we can have a 90% accuracy in forecasting the daily bias. But first, let me ask you, what is the most important concept in trading? To understand this, we need to understand what a profitable trade actually is. A profitable trade is just the right direction and the right execution. Everyone seems to focus on execution, and that is exactly why most traders are unprofitable. You're focusing on the wrong part of the formula. So a profitable trade is right direction and right execution, but first we need to master the direction, because only then will we know where we want to execute. And that's exactly where daily bias comes in. So how do we find the daily bias? The first step is to identify the key levels that the market is reacting to. Now, what do we mean by key levels? These are places on the chart where the market is consistently showing respect, such as daily order blocks, daily fair value gaps, external liquidity, internal liquidity. So I took a screenshot of every single order block right here as NASDAQ was moving to the downside and as NASDAQ was moving to the upside. And what you can see is that as the market is moving lower, it's consistently respecting bearish order blocks. For traders who don't know what order blocks are simply a counter trend move in a trending market. So if the market is bearish, but on a specific day it moved bullish, or in a specific time period it moved bullish, it creates a bearish order block. As we can see here, when the market is bearish, it creates this bearish order block on a rejection. Same thing here, we move lower and then we fully reject, but because the market is bearish, it continues moving to the downside. So this bullish candle becomes a bearish order block, bullish candle gets engulfed, this becomes a bearish order block, and so on and so forth. The same thing on the bullish side. These bearish candles are an order block, this bearish candle is an order block, these bearish candles are all order blocks that are continuously being respected. Then we have fair value gaps. Fair value gaps, for traders who don't know, is a 3-bar pattern that marks out an inefficiency between the first and the third candle of the chart. It leaves a gap, so therefore this becomes a fair value gap. The market moves bearish, creates this bearish fair value gap. As you can see, it's the area between the low of the first candle and the high of the third candle. That creates our bearish fair value gap, and the market reacts from there. Another fair value gap, another fair value gap. And then once we turn bullish, we have another fair value gap, another fair value gap that continuously get respected. Now we have external range liquidity. So external range liquidity is always the extremes of market structure. So as you can see, when the market moved to the upside, external structure becomes these massive key levels, such as this one right here and the all-time high. So external liquidity is a very important concept to know. And then internal range liquidity, which is the most recent daily highs and lows, usually give us internal range liquidity. Now, when you identify these levels, something powerful happens. You begin to see what the market is choosing to respect. Is it holding at bullish levels, or is it rejecting from bearish ones? So if we go back and we put everything together, you can see that as the market is moving bearish, you can only see the market reacting from bearish levels, right? So during all this time, you would be bearish. But these key levels are not enough. And very soon, I will be sharing the one secret that I haven't shared with anyone that gives me a 90% accuracy with a daily bias, with an example of a trade that I took today. When you identify these key levels, something powerful happens. You begin to see what the market is choosing to respect. Is it holding at bullish levels, or is it rejecting from bearish ones? So we've put all of these together, all of the levels that I've mentioned, and I want you to notice that once the market went to external range liquidity, we had a massive impulse to the upside, and this is what then created the bullish market structure. When the market is bullish, bullish levels get respected. Look, order block, fair value gap, internal range liquidity, order block, fair value gap, internal range liquidity, fair value gap, order block, internal range liquidity. All of these are being respected when the market is bullish. So on a bullish market, bearish levels get disrespected, while on a bearish market, bullish levels get disrespected. You can see it here, an example of exactly that happening, where we have bullish order blocks, but as soon as we reach the bearish order block, all the bullish order blocks get fully ignored and absolutely destroyed, and the market goes towards the external range liquidity. You can clearly see that we are not trying to forecast where the market is going to react from. The market is telling us what it is choosing to respect, and from there we have our daily bias. So we have bullish order block, bullish order block, bullish order block being respected, bullish order block being respected, bullish order block being respected. So through all this time, you would be bullish because you understand that that is what the market is always choosing to respect. And keep in mind, obviously, there are going to be bearish days. There are going to be counter trend days because the market can't just move up. It needs rebalancing. And that's when we create these order blocks that we then use to trade. And this is where something very important happens. For us as day traders, one of the most important things is that we need to understand how we trade. And it's directly in the name. We are day traders, meaning we trade on one specific day. We're not trying to hold trades for a long time. So we need to forecast what the market is going to do today. Now, the secret is that you should actually be looking at internal structure instead of external structure. This is an example of one of the days where I went counter to the trend. Why? Because we had a bearish engulfing candle right here. So you can see that the candle body disrespected the previous bullish candle body. That is a bearish engulfing. The market comes all the way back up, and I was shorting this market, and that is what led me to having a very profitable trade. And then on this specific day, my idea was that the market was going to come towards this order block and then reject, which is exactly what happened. Once we had the rejection, my mind went once again, okay, the market is telling me that it's still respecting bullish key levels, so therefore I want to execute on longs. And that's why I was longing all the way through to all-time high. And we can see that pattern happening over and over again. Especially this year was great because you were able to see the bearish and the bullish market structure. While on NASDAQ mainly we have bullish market structure, you can clearly see that this also works on the bearish side with the fair value gaps, with the order blocks, with the next order blocks, with the fair value gaps, and so on and so forth. And so the secret into daily bias lies on what is the market choosing to respect. And now you might say, well, Kimmel, but does that only work on NASDAQ where it's always up and to the right? And yes, NASDAQ is always going to give you an easier daily bias, but let me tell you that this works everywhere. For example, on euro dollar, for the whole time, we were noticing that the market was always respecting bullish order blocks, right? We have an order block right here, and then we have internal order blocks that continue being respected. We can see that clearly right there. And then once the market moves bearish, a lot of traders get caught out and think, oh my God, this is the top, let me short. But we just waited for the market to finally show us bullishness, and then we continued longing euro dollar towards the external range liquidity. And you can see order block respected, order block respected, order block respected, order block respected, and eventually notice how this order block failed, and this is where we became bearish, noticing from this, because we have multiple levels that the market is choosing to respect over and over again, which are the bearish levels: bearish fair value gap, bearish order block. Notice how the market is always reacting from it and then gives us the bearish delivery. The secret to finding the market direction is all in the question, what is the market choosing to respect? And then not trying to counter what the market is already choosing to respect. Because one of the big issues that traders have is that they see NASDAQ moving to all-time high, they see gold moving to all-time high, they see euro dollar creating more and more bullish price action, and they believe that at one point there needs to be a pullback. And believe me, yes, at one point there is going to be a pullback. But since you are a day trader, you are not trading this full pullback. But since you are a day trader, you have more than enough time for the market to show you when that pullback is happening before you then execute. And now here's a last tip, and this is something that I rarely say publicly, and that is that one very important important concept also for daily bias is the 4-hour direction. Because by knowing the 4-hour direction, you can forecast where you are going to execute today, which is exactly what I did. So here are the 2 trades that I took today. One of them was a break even and one of them was a 1.6R trade. So notice how I marked out all of the bullish levels, and we know that the market respects bullish levels. But in order for the market to respect the bullish level, first it has to get to the bullish level, and that's what I executed on. And the first telltale sign for myself was, notice how the 4 hours started losing steam by having engulfing candles. So we have an engulfed candle. We're going to mark this out with a red box, and then we're going to go to the lower time frame and see exactly how the market is reacting. So on the 1 hour, we have multiple bearish order blocks and fair value gaps being respected. And then once the market opened, if we go to the 5-minute, you can clearly see that we have the market constantly respecting the bearish engulfing, the 4-hour bearish engulfing that we've marked before. So once it starts showing bearishness, what do? I trade targeting the bullish key level that I expect the market to reject from. And that is exactly how we get 90% accuracy, and not only that, we are able to execute on that accuracy. So to find the market direction, answer the question, what is the market choosing to respect? And that will give you the daily direction. I also want to share the payout of a student of mine, Bobby, that got a $4.7 thousand payout. And the reason I want to share this with you is because Bibby asked, just out of curiosity, what was the missing piece in the puzzle? Someone asked Bobby, what was the missing piece that changed his trading and got him $4.7 thousand in payouts? And his answer was, it small stops, a secret that I told him when I got coffee with him in Dubai, or was it something simpler? Well, let me read you exactly what he said. Bobby said, the missing piece of the puzzle was bias. If you are bullish and price is going bearish, I was not taking trades. I was waiting for price to become again bullish so I can trade again. So Bobby did not send a 50-line essay on what got him those payouts, $4.7 thousand, $4.1 thousand, or even $2,000 in one single day. He blamed one thing, which was direction. And if you are looking to master direction, then make sure to check the second link in the description. That is for my mentorship, where every single day I forecast the direction of the market for that specific day. So you are never lost in the market, because you can take this and you can become profitable, but you can also join a mentorship and have me guide you. We guarantee that you get funded in 90 days. And if you don't, I will personally mentor you until you do. Because we got Jeff funded in 20 days. We got Christy funded in 10 days. We got Sander over 50 payouts. We got Tomasz funded in 30 days. And Tori funded in just 20 days. So if you want to learn more from me, then sign up using the second link in the description. If it doesn't work, it's because applications are closed, since we only take a very limited amount of people in every single month. So with that, I hope you enjoyed. I'll see you in the next one. Peace.